So welcome everybody and thanks for joining us today. My name is Abigail and I'll be doing the moderating for this webinar today. My background is in urban planning, and for the last 10 years I've been working in affordable housing and community development. I currently work with New Commons Development, which is a nonprofit real estate developer. So again, welcome to the webinar, which is on affordable housing and community campus partnerships in Canada, growing the potential role and responsibility of post-secondary institutions to increase affordable housing. So we have 4 presenters today with us, and I'll introduce each of them in the order they're presenting, and then I'll turn it over to them to do their presentations. And how we'll do this is that each person will present for about 5 to 7 minutes, and then you'll have a couple minutes for questions. And once that 10 minutes is complete, we'll move on to the next presenter. At the very end of the presentations, there'll be another 15 minutes for us to have a discussion generally. So the first presenter is Nimoy Lewis, and he's a postdoctoral research fellow with the Jean Augustine Chair in Education, Community, and Diaspora at York University. He has a PhD in Human Geography from Queen's University, and for his upcoming postdoctoral research at U of T, University of Toronto, he will be exploring growing affordability problems impacting renters in racialized communities since the financialization of the rental markets in Canada.
So folks, speaking of technical difficulties, it looks like Abigail has lost her connection. But the good news is that I have the bio in front of me, so I'll continue reading it. He has contributed to chapters in 2 books, Neoliberal Chicago and Gentrification as a Global Strategy. So our next presenter will be Laurent Levesque. He is the executive coordinator and co-founder of Untitled, a nonprofit founded in 2013 that is currently developing 200 units of affordable student housing in Montreal. He's graduated in urban planning and is involved with other nonprofits, most notably as vice president of the board of the Chantier de l'économie sociale. Alia Abia's passion is finding unique ways to bring people together, especially groups which seem like uncommon allies. Alia's academic background is in fine arts and a BA in sociology. Her career has spanned social justice, community arts and development, private foundations, corporate responsibility, and now finds herself landing at Alterna Savings as the Director of Community Impact, supporting building tools and opportunities for social finance. And then our last presenter today will be George Souza, who is an associate professor in the Department of Educational Policy Studies at the University of Alberta. George's primary approach to research and practice is community-based, and his areas of research fall within the intersection of community development and adult education. The focus of topics in this webinar will include relating the affordable housing crisis to community building, the commons and community housing, and promoting agency, partnerships, and social value. So I feel that Abigail has been able to join us again, but I think what we'll do is we'll just move right into the presentations. So Nimoy, why don't you get us started?
Okay, so for today's presentation, what I'd like to talk about is rethinking affordability, the financialization of multifamily rental housing, more specifically in the Toronto market. So how I got started with this particular research was looking at the US foreclosure crisis and looking at the ways that it impacted the African-American community in both Chicago and Jacksonville, Florida. Upon completion of my research, I noticed that a lot of corporate or Wall Street entities were entering the fold in entering, I guess, the residential real estate market in acquiring a vast amount of properties, more specifically the single family housing market. And one of the things that they were doing was they were acquiring these properties through different means, through a particular finance tool called rent-backed securities, which was created by the private equity firm Blackstone Group. And rent-backed securities work very similar to mortgage-backed securities. The only difference is that your rental payments is being used to pay bondholders. So going on, what is financialization? So financialization is defined as the increasing dominance of financial actors, markets, practice, and measurements and narratives and at various scales, resulting in the structural transformation of economies, firms, including financial institutions, states, and households. So what you had was a lot of corporate entities that were changing the definition of housing from its use value to more specifically to its exchange value. And the reason for these particular entities in entering the market was through a number of neoliberal austerity measures when the federal government eliminated funding for new social housing and initiated a downloading the responsibility of social housing administration and funding onto the provincial governments. The Ontario government more specifically tried to pick up the slack, but was unable to, as in 1995, new elected conservative government canceled funding towards social housing and downloaded social housing onto the municipal government. Another measure that sort of precipitated the entry of these particular entities was the 1997 Tenants Protection Act, which was introduced, replacing the 1992 Rental Control Act. A central feature of this new act was the introduction of vacancy decontrol, which gave landlords new powers to raise rents on vacant units by any amount. Vacancy decontrol provided enormous incentives for landlords to capitalize on the rent gap that had emerged between lower rents paid by sitting or often long-standing tenants and the potential for much higher tenants that could be achieved from higher income renters, particularly in areas where gentrification has pushed up property values and rental values. Furthermore, the act allowed landlords to pass along certain costs to tenants by applying above guideline increase. So even if the unit was vacated, certain investments allowed for substantial rental increases for sitting tenants. So these are a list of some of the Canada's top largest residential landlords. And as you can see, many of these particular entities have amassed a large sum of properties since following these changes within the Landlord Tenancy Act. And some of the other new players have been pension funds and private equity firms. And so more specifically, Ivanhoe Cambridge, which helps manage the Quebec Public Sector Fund, have been previously were heavily involved in the industrial and commercial real estate markets. And now they've been heavily invested in the multifamily rental market. And other entities have been Oxford Properties, which manage the municipal public pension funds here in Ontario. And they have been also very active in the multifamily rental market, not only here in Canada, but on both sides of the borders. So some of the strategies that these particular entities use is one is the value-added strategy by major capital improvements to reposition under-market rental units, thereby releasing their untapped values, where their belief was that mom-and-pop landlords were not maximizing the potential of these particular properties. And as such, these particular entities made tremendous investments to reduce the maintenance costs and reposition in under-market rental units in areas that are undergoing gentrification. So another measure was the cost-cutting measure to maximize earnings. So purchasing undervalued properties and with untapped potentials, low vacancies, and stable and neighborhoods with a stable tenant base. And these particular neighborhoods had usually high poverty rates and were usually located in post-war suburban areas within the city and largely encompassed racialized households and lone parent families. And, and so they would invest in these properties to perform upgrades, again, to reduce the operating costs and maximizing income. And the other particular strategies they would do would be to reduction in service. So they would also try to get tenants to sort of complete some of the repairs within the units. And so they would have like how-to particular videos on their websites to assist with those repairs. They would either also neglect repairs to also cut the cost of cut their operating costs. and also increase their rents, which in turn reduce the affordability of these particular units. So what are some of the repercussions is that there would be disproportionately affecting racialized households, immigrants, and lone parents and seniors. So this would create acute affordability problems for low-income households. And one of the things that I should note is that since 2015, a particular report found that over 650 applications were received in regards to above guideline increases, in a sense creating a huge problem of housing security and stability for low-income and racialized households. And these are some of my references. Thank you.
Great, thanks, Nimoy. And I apologize, everybody, for my Wi-Fi issues here. Okay, so perhaps what we'll do is we'll move on to the presentation from Laurent.
Thank you, Abigail. I'm here to talk to you about Utile and our development model for affordable student housing. So as was mentioned in introduction, Utile is a Montreal-based nonprofit. We currently have 300 beds, 200 units in development, about half of which is currently in construction in Montreal. And our mandate spans the province of Quebec, but we're very active in expanding this model to other provinces. And there's actually another nonprofit that's already starting in Ontario with a similar business model. To start, I want to just bring to mind the general benefits of nonprofit development in student housing, because students are actually also victims of the trends that Nimoy was identifying. And they're also the target of a lot of for-profit student housing development, which targets only the wealthiest of students. Our approach and our model and our projects aim to be affordable for the majority of students, not just the wealthiest. And they have the added benefit of being affordable forever, which helps cities make sure that they have a stable provision of affordable student housing to have capacity over time. Our model is based on a couple of components. You can see here the first building that's under construction. So the first central component of our model is a nonprofit developer, but most importantly, owner. So these buildings are owned by Utile, a nonprofit, over time, which is critical to prevent speculation on rents, which is something that you see a lot on student households. Second, there's a component of cooperative management. So student tenants are involved in the management of our buildings. This helps increase their quality of life and empowerment. It's optional, but it's often appreciated by students to have this opportunity to have power. And it's less paternalistic than more traditional approaches to student housing. There's a significant piece of private investors in our model, which I'll get back to earlier, but for the funding of this project specifically, we set up 2 investment funds. So that gives you an idea of how important it is to mobilize private capital for this model. And finally, there's a minority component, about 10 to 20% of equity or generally grants that's required to make this model work, which I'll get back to also, but it helps to achieve not only affordability, but also simply feasibility, because as a nonprofit, we don't have shareholders, so we don't have millions of dollars to invest in our own projects, and it takes this little bit of cash down to get the ball rolling and actually deliver projects. This model has been of interest to a wide variety of partners. It's interesting for governments because they can get low-cost, affordable housing units developed. And this reduces student pressures on housing markets because the vast majority of students, at least according to our data, live on the private rental market, and cities have an interest in appeasing this pressure. It's interesting for educational institutions because they get a low-risk option to have more affordable housing options to complete their portfolio. It's off their books because it's not owned by the university as a traditional residence would be, and it doesn't require direct state funding going through, for example, ministers of education. And finally, this model has also been of interest to student unions, which is maybe an uncommon ally in the housing field and in real estate development. But there's a benefit to students themselves, and we've succeeded in at least in this project in securing a fee levy investment from the Concordia Student Union that was about 10% of the global budget. We can move on to the next slide just to show our next project. So this is the second building that's under construction. And next slide, please. The big way we achieve all these benefits is with very high leverage on equity. So this slide shows the variety of partners involved in the $18 million budget of our first building. And a lot of these are investors. So they're investors coming into this product because they see it as a low risk component of their real estate portfolio. It's isolated from other market risks. So it diversifies their portfolio. It has the benefits of student housing without having the risk of for-profit luxury student housing. And we aim to always maximize the amount of debt in our project because all of it is fixed return. So there's no speculation on rents. There's no incentive or pressure to benefit from the high turnover of students to increase rents over time. And finally, this approach allows us to leverage any form of equity or cash down to make a project work, which means that, for example, it would be possible to entirely finance a project with private investors if a college or a university were to donate or sell or lease a piece of land below market value. And we can also work with a little component of funding from the city, from students, from other levels of government, and there's a big discussion with the CMHC, and there's opportunities in their national housing strategy as well. So there's lots of different ways to make this model work. Thank you.
So there's one question that came earlier on, so I'll raise it right now. Perhaps talk about and perhaps you can talk about it now or maybe later on. Just the role of cooperative housing. This is from Jen. What role does cooperative housing play in affordable housing in your opinion? So I think you went into that a little bit, but if you'd like to respond now or perhaps later.
Sure. Well, actually, it's interesting to note that student housing co-ops were among the first affordable housing projects in Canada. They were foundational in the movement for cooperative housing. And we do have a bunch, like a network of student housing co-ops in the country that's housing thousands of students annually, all below market. So I think it's a critical piece, but there's little to no institutional recognition of this specific model to student housing, and there's very little financing for new co-ops to launch. So even if existing co-ops are currently developing, for example, there's one in Waterloo that just recently is finishing the construction of a new 368-bed redevelopment. It's very difficult or even impossible for them to obtain financing through CMHC programs, for example. So we take a more general approach to affordable student housing development, which includes a cooperative piece, just because it helps to be flexible in speaking with different institutions that are often not aware of the cooperative model and may ironically have fears related to it, even if it's one of the most successful affordable student housing options in the country.
Okay, so we'll move on to Aaliyah next. Thank you, Laurent, for your presentation.
Okay, so that was actually a perfect segue with both Laurent and Nimoy's presentations. Mine, I work for Alternative Savings, the credit union, but I'm from the nonprofit sector, and I consider my role and department here as sort of the translator between the different parties at play, specifically when we're exploring community partnerships around issues like affordable housing. So we'll just go to the next slide, Nicole. Thanks. All right, so currently, as already mentioned, there are a number of community-based models. Cooperative housing was one that was mentioned. Restricted resale, which is something like Artscape, or there's a community in Whistler where it's below market value purchasing, but you aren't allowed to, there's a cap on how much you can sell it if you want to resell it. So it's not about making a profit, it's about providing an affordable place to live. And there's models for nonprofit housing for specific communities of need. Options for investment. So you have nonprofit groups and in-kind physical space partners such as faith-based churches, NGOs. Right now, I'm really fortunate to work for an organization that values these sorts of connections and models when looking at exploring new opportunities. And so we're actually part of a research team looking at how existing nonprofits who hold assets could be able to use and explore their social purpose real estate further in supporting the building of affordable housing. You want to, as a group entering into this process, you want to explore the match and values base of your relationship to ensure that there's like a good fit and that the organizations have the same values moving forward. I listed some examples here of existing models that are really successful. So one is the Vienna model. This is one where you partner with the municipality and they purchase the land deemed to be affordable housing. Then they put out a tender to developers to build on the land. Based on the applications from the developer, which look at 4 criteria: architectural quality, environmental performance, social sustainability, and the economic parameters. They resell that land to the developer, and then part of the cost is that some of those units must be affordable and staggered in their values. Then there's also the community land trust model, which I noticed the first slide on Nimoy's presentation was in Parkdale. So Parkdale, a neighborhood in downtown West Toronto, which has been heavily burdened by gentrification, recently formed a community land trust. And actually this spring, summer, they were able to actually secure their first 15-unit building. And what a community land trust does is it takes the ownership of a property that was once intentioned to be for commercial and speculative market, and it becomes a community asset. So now this trust holds that property and the ownership, and they can keep it in the community forever. And then there are other 2 projects that we're exploring, which are the Equity Builders Residency Pilot, which is a pilot where tenants would pay market value, but the most of the chunk of that is saved. The actual cost of the unit would be below market, and the difference is saved in a term deposit and given back to the tenant at the end of their lease. Okay, the next slide, please, Nicole. So as you or your organizations decide to approach different opportunities to consider affordable housing, here are some of the financial considerations to keep in mind, and this comes from a traditional commercial team, the things that they would look at. So when in the underwriting and adjudication process, they would look at the strength of your management team, who you've put together, the feasibility, the proof of your concept. How can you demonstrate that this project will actually come to fruition? How will you service the debt, i.e. pay the mortgage? What are the supporting documents? They include your income statements, employment letters, projected cash flow if you're renting it out, if it's co-working, like what other elements you're including, credit scores of the individuals, etc. They would expect to see a thorough business plan with market research about the neighborhood, the demographics, any detail that you could sort of put into that. A security, so obtaining a guarantee. This could be, if it's students, things like parents, the university, the city, other nonprofit partners. How are you obtaining your capital as your down payment? Do you have it? Are you launching a capital campaign, etc.? Okay, next slide, please. And then other points to consider are your governance model. If you're doing this as a group, there needs to be consistency, need for policies to be clear and meaningful. What happens if this is a student-based affordable housing project? What happens at the end of the school period? The residents who are no longer students, are they able to stay? Are they forced to move out? What is the cultural mission? And from a student perspective, what differentiates this type of living situation and from traditional campus residency culture? The responsibility for continuity often falls on the staff managing it, and are those students as well? Due to high turnover, boards for student co-ops often face a lot of challenges like this. The responsibility, and of course, is challenging to manage with the lifestyle of a student, which is often demanding. And then even things like neighbor relations. Are your neighbors supportive of the project? Do you face NIMBYism? What are some of the other issues and these are actually points that were brought up by partners like the Cooperative Housing Federation of Toronto, and things that they've actually encountered as challenges with the student co-ops or affordable housing units. And then of course, the investment in student housing and maintaining that ideological component is an important part. So do the residents actually know that they're living in cooperative housing or a deemed specific housing to serve a market, or are they just there because it's cheaper rent? And one more slide. So in terms of partnerships and resources, there's many options. There's nonprofit groups, in-kind physical space. For example, faith-based, the United Church is selling off a church a week right now across Canada. And they prefer to keep it in community-based, so partnering up with teams like that. Former schools, actually with existing developers, as they build new development, getting in the early discussions with partners on that about reserving some space for affordable housing. I would research potential guarantors, who's been in it before, the processes, nonprofit partners. Part of the research we're doing right now is about some nonprofits have large and healthy reserve funds, so how can they use that to support their local economies outside of their traditional program delivery by supporting and investing in affordable housing. And that's it. If you have any other questions, don't hesitate to contact me. Thank you.
So there's a question that Graham had asked before, and I think perhaps you can speak to it a bit, Aaliyah, and perhaps this is something that also Laurent could address as well, and even Nimoy. But just really briefly, it was looking at examples of university partnerships with private capital groups and what's the process for attracting private capital to a project, and to have a mix of both private and public funds. And then Jen was also asking a question around examples of nonprofits investing in housing. So I think that's your last point there, Aaliyah.
Yeah, I mean, I feel like Graham's is probably better answered by Laurent, but I can definitely address Jen's. There are some examples of nonprofits investing in housing. For example, service delivery organizations typically who own assets, specifically real estate, where they maybe the podium or the base of their building might be for service delivery. They've decided to build upwards and redevelop higher and go and build actual apartments. That's one. Usually they're investing in their own asset to increase the value and then also provide housing. And there are a few examples of them investing in other organizations as well. Like if an organization, nonprofit, doesn't have their own owned property, but they have a good chunk, they can invest it in other organizations' community builds. I hope that answers your question.
And speaking to the mix of, the private funding, in our first project, the ratio is kind of off because we have a $3 million public loan from the Affordable Housing Innovation Fund at CMHC, but typically we'll have about 80% public and 20% private or like general cash down. So pretty high ratio, sometimes even higher. The process for attracting private capital, in our case, we have a very broad, very clear objective to change the infrastructure around the development of affordable student housing. So we've been working to finance our, not just on a project by project basis, but really to change the financial ecosystem, which is why our process was setting up investment funds. And the most recent one is an $11 million patient capital investment fund. All private investors, institutional investors, and the fact that we worked with a fund manager to set up this fund means that it's designed really in order to maximize the effect on the leverage we can achieve in our projects, and it supports our objective of affordability and non-speculation on rents. So we avoid going project by project, partner to partner, because you can only approach smaller investors like this, and they end up often wanting more control. By having a more portfolio fund-based approach, we can target larger investors such as pension funds or large foundations and get them to see this as big enough, worthy of their time, because it's large scale enough. So I hope that helps, and I'm happy to discuss further if you're interested.
Great, thank you. George, it's over to you now. Thank you.
Okay, well, thank you. And I appreciate this opportunity, especially to go last, because just being able to hear about a lot of the exciting work that's going on across the country and the ideas and so on, it's encouraging. Normally, one would think about, okay, what's the foundations on how we got to this problem as setting the stage for what we've heard so far. But I prefer to consider how the previous presentations have actually started to address a lot of the issues that have been permeating and enduring for over the last 50 or 60 years. And so it's very exciting to see how the foundations of this, what we're calling a crisis, is currently being challenged, and the very idea of a crisis is being contested. Because certainly housing affordability is a crisis, but it's also a manufactured one for the most part. And I believe the examples that we've heard so far demonstrates that we can't let the idea that a crisis has to be enduring and that there are options, because there's always been a crisis, but there's also always been solutions. So what I want to do here is just provide a little bit of the background and allow certainly the folks to start making the links in terms of what we've heard into some of the challenges that got us to where we are today. And also talk about how do we actually start contextualizing the different examples, the different options into a broader framework that we should be considering, or what many people are calling the new economy. And I want to end by referring to specifically university and certainly student housing, and build on a lot of what we've heard. So as many likely know, the solutions have often relied on the state to regulate and invest in forms of interventions. And there has been pushback, certainly in the 50s and 40s to the 60s, from the private sector to limit the role of government in developing a comprehensive regulatory regime for non-market housing as an option to the broader population. And we have also seen, even when there has been different policies and different programs of funding and so on, that we haven't had the stability of policies and programs because they have been affected by changes in government. And our very political system has been a part of this creation of this crisis. So the early interventions in public housing, for instance, has had immediate effect, but over time it has not worked for the public good, I would argue, when it is solely based on the public or private sectors leading the interventions. And so really the third sector, the social economy, or currently the social and solidarity economy, as we're beginning to better understand, is providing a different alternative through partnerships and so on, which I'll get to in a moment. So the commitment previously hasn't been to build communities, and what we've heard so far is really the housing becomes the means by which communities are built, not just for shelter alone. Shelter clearly being important, but also being able to live in a thriving community is equally important for a variety of reasons, as we all know. So policy levers have not been to support communities, but the alternative options have been to support communities through different policy levers, such as tax credits, vouchers, and so on. But as we heard certainly in Nimoy's presentation or discussion, that there are really clear limitations from these levers. So the early alternatives, as we're also seeing currently, at the time there were new models. Co-ops were very new, nonprofits were very new in an organized way. They were based on ideas, a broader framework from a movement perspective, and they worked because they were challenging the status quo. What we're seeing now is a lot of options, a lot of alternatives are becoming part of the status quo, and the whole idea of community building is being, once again, sidelined to a certain extent. And that's fortunately being challenged by organizations such as Alterna through their different funds and some of the investment funds that we've heard from Laurent. So why was it possible back then? Certainly it is very much similar to why it's possible now. Financing options were much clearer back then, but they're much more diverse now, which certainly leads to a level of precarity because the private sector can have a greater role, which is certainly problematic for a variety of reasons, as we've heard. But back then, there was also novelty and excitement about the idea of new models. And certainly the novelty is still there, but I think that the dire need is a lot greater now because populations have increased, poverty levels have increased, and because of neoliberal agenda, we're seeing less and less involvement of government in everyday lives and supporting different programs. But what we saw back then is also what we heard through these presentations is that community building is one of the key principles driving affordable housing options. And as we heard, started to depart the idea of government intervention in the 80s and certainly into the mid-90s at the federal level, and provincial involvement certainly didn't help. I think it's also important to point out politically that the NDP hasn't fared much better. So even though the NDP came from the CCF, the NDP has its roots in the cooperative movement, but the cooperative movement wasn't a driver. So sometimes we wonder, why can't the NDP be much more demonstrative or supportive of these housing options? It hasn't always been the case. I think we tend to take it for granted, but we need to keep on pushing political parties, in particular the NDP. So the community models that we've heard, and the ones that have been enduring over the last 30, 40 years, largely because they do fit within what we're now calling a new economy. So some of the key principles I just want to throw out there, coming from the New Economics Foundation: a thriving and healthy environment at the core of a new system. Better and more equal living standards, greater common cooperative ownership, progressive businesses, decentralized active states, empowered and active communities. Taken together, these principles are guiding certainly the options, but also reminding us that what we're proposing through these alternate deliveries, alternate financing approaches is building something different across society. And just to conclude here, what we can glean from what we've heard is that for the universities is, I don't believe that universities should be landlords. I don't believe that universities should continue to take on big housing projects. I'm certainly a strong believer in the need for partnerships. And that has always been one of the successful approaches, as we've heard. I certainly believe, other than residents, that through partnerships, that universities can actually leverage assets, land being an example, to develop land trusts, and we know that those do work. We also know that universities can work with social economy organizations, such as a chantier. And I believe that's one of the key ingredients of what makes the examples coming out of Quebec so exciting, and that just really, really encouraging for us to learn across the country. In terms of financing, the development of investment funds that universities can contribute to and also access through student unions, perhaps, because I also believe that student unions should have a role in developing affordable housing for a variety of reasons. And lastly, I want to point out that what's exciting is the example of the Student Dwell in Toronto. The partnership between government, nonprofits, communities, and the private sector is an innovative model that I'm not sure whether or not they actually have resulted in affordable housing, but at least you have different stakeholders coming to the table. And just reminding of the need to have municipal governments involved in any different models, and also the need, and as we've heard through Leah's presentation, the need for research, doing impact studies for these different approaches, whether or not we should see student housing as a form of community building where the students actually aren't seen as a transient population, but actually intended to be building different neighborhoods, different communities. And I'm actually going to end there because we're running out of time. Thank you.
Great. Thanks, George, for that, I guess, coming together and also just highlighting some of the context that in the history around housing and housing affordability and where we are today. So there's another question that came through. And so I wanted to go back, I guess, kind of broadly to Nimoy's presentation, and make one of the questions had been about, Anthony had asked about how can these partnerships leverage intergenerational opportunities. So I guess I wanted to make a connection between this idea of investor portfolio for new housing that Laurent was talking about, and then also what is the specific challenge around taking over properties or the financialization of properties. So is there an opportunity there, Nimoy? Have you seen any examples in your research around what has been done to respond to that? Would be perhaps, I guess, doing the opposite, but providing housing that's affordable. Nimoy, I was hoping you could answer that question, and perhaps, Ali, you may be able to talk about mainly from sort of that private capital perspective in terms of, is that like a pipe dream? Is that too complicated? Or is that something that's possible? If we can bring investors together for new housing, can they do that for purchasing older buildings and then maintaining the affordability levels of those buildings?
I mean, I think it's not a pipe dream at all. It's definitely possible. It's really about that shared values piece, though, right? Are you bringing the right partners to the table, and that building? It seems cliche, but really building that trust in the relationship about having the same objectives and outcomes. Right?
I think it's very difficult. I think what I know about now about pension funds and other private equity firms is one I think is important is the scale. And at the end of the day, like these particular entities are looking to make money, and I don't know. I don't know if these particular models would jive well with their business model, and especially how I see they operate already within the multifamily rental market, and the way that they view housing. Not so much for its use value, but more in the sense for its exchange value, and treating housing as a tradable asset. So I'm not so optimistic that I think that I think private equity or pension funds or those within the private sector could assist in helping us solving some of these pressing issues.
Okay, thank you. Laurent?
I would just add that I agree with Nimoy. I think the answer won't come from the investors directly, because the critical piece, I think, to the affordable housing discussion, and maybe this is biased because it's coming from a developer, but is the intermediate. It's the promoter piece between the capital and the housing itself. Because when investors, when Wall Street types buy housing, of course they're trying to maximize their returns because they're purchasing it with private equity and with direct ownership, which is why it's critical to have a nonprofit be managing the assets. And potentially, if you want to mobilize capital, you can do it there, but it's not going to be through variable return shares. It's going to be through fixed return debt, which is a critical piece. And you're going to maintain value alignment because you're going to have a value-driven organization actually running the housing piece. And this is true whether you want to buy existing housing to take it out of the speculative market, then you need a nonprofit just owner to hold it. But also if you want to shift the trends in development, you need nonprofit developers. It's not going to come out of the current infrastructure in the real estate development field, which is why no one was developing the types of projects we're doing in Quebec before our organization was founded. And I'm not saying this to tap our back, but saying if we want this to happen at a different scale and throughout the country, we need to make sure we have value-driven and mission-driven organizations with no private ownership leading the charge for development, purchasing, and realization of actual projects, because that's the buffer. That's the buffer between your investors and the housing, the tenants, the people that live there. And it's true, it can work for co-ops as well, mobilizing the capital, but then there's the question of scale, which is why usually co-ops are developed by resource groups, which are essentially those developers. But if we want a more diverse body of affordable housing, including student housing, I think we need to have a more diverse body of developers.
Okay, thank you. There's another question that was asked of Nimoy, so I'm going to go back to it. Maeve asked the question around the criminalization of the real estate market, and is there research happening in this area, and how significant is this? And really thinking about the role of public policy and regulating housing. So Nimoy, if you could respond to that, thanks.
I'm not aware of any research that's. I'm assuming that the question is in regards to the work that's going on in BC right now with the criminalization that's happening within the residential real estate market with money laundering. Is that where the question is coming from?
Yes. Yes.
So not that I'm aware of, but I know that in regards to these particular entities, I know that there is work that's going on right now that is examining how can we regulate the financialization of housing, more particularly affordable housing in Berlin, because these particular entities are global. They're not just investing in properties within the Canadian context, largely because there's not enough multifamily or residential properties to acquire at the scale that they need to maximize their earnings. So I know that there was particular regulations that were put forward, I believe, in Berlin in regulating these particular entities from amassing, tens and thousands of properties to only allowing these particular entities to only amass maybe, I think it was 3,000, to cap it at 3,000 in Berlin. I think that's where the work that's been going on there that I've seen with respect to regulating these particular entities. But no, I have not seen any regulations that or policies that have been put forward to regulate financialized landlords. And I think that there should be for sure, because I think they're only looking to grow. And I think with the changes with the new tenancy protection where rent control has been eliminated from newly constructed buildings, only is going to invite these particular entities to enter the space.
So the only other question that was I had received earlier on was around intergenerational partnerships and the opportunity to leverage that. So I'm not sure if anybody would like to talk about that. I think it might be more directed at Laurent because it's really looking at students.
Sure, and we actually just finished a pretty thorough research report on opportunities for intergenerational housing. What a mouthful! To answer that. First, I'd like to just frame exactly what I think we should mean by intergenerational housing, because a lot of the examples that people have in mind are homes for elders that house one or two students or a handful of students as a way to have more activities for seniors. That's of course not an answer to the student housing need. So what we've been looking into is the feasibility of half and half projects. Half seniors, half students. We find that there's an interest for that. There's an epidemics of isolation, social isolation in older people, but that doesn't mean that the majority of them want to live with students. So we ran surveys and you don't necessarily get the results you would expect. So I don't think that's like a one-all end-all solution, or that even the majority of seniors would be interested. But we do find that some people, especially younger seniors, early retirees, could benefit and could really enjoy being in a permanent learning environment. The best practices to keep in mind for this type of housing are you need common spaces where people will interact, so that it's not just multi-generation, it's really intergenerational. And the second best practice is it's really helpful to achieve that objective to have a staff person who could be part-time, but just who would be in charge with that community building, the relationship building, so that people have opportunities to meet and actually build bridges and build that community, especially since there's a weird dynamic where seniors can stay for a while, but they're constantly aging, whereas students have high turnover. So you need to constantly be rebuilding that community. So our conclusion was that it's an interesting model to explore, but it would require some public funding for that, especially for that staff piece, which it's really unreasonable to ask renters to pay for. So that's our thoughts. And if you're interested in that research report or any of our work, you can find more information on our website, or just contact us and we'll be happy to share our French language research report and other documents. Thank you.
Great, thank you, Laurent. So we just have a couple minutes right now, and I think perhaps the last question I'll ask really briefly, it speaks to what's the best way of building regular affordable housing and to increase the supply. particularly when the current regulations seem to dissuade investors or turn them away. So I think it goes back to that issue of we're lacking in supply, we want this affordable stock, but it's not something that's profitable. So I'm wondering if you want to comment on that at all, George, just from that sort of regulatory perspective in the context, like what you see may need to happen to build that regular supply. Oops. You're muted. Oops.
Unmute myself. Okay, there we go. I just want to build on one of Laurent's comments in my response then in terms of the need to have intermediaries involved. Intermediaries can be involved in housing as just one part of their portfolio. They could be doing other things, developing social enterprises, developing other types of innovative practices, community building activities, ones that can actually see a decent return on investment. And we are seeing scattered intermediary organizations across the country, but we have to promote those as one avenue to continue getting different forms of investment. And secondly, I would also encourage the development of investment pools of different sorts. I think, for example, here in Edmonton, we have a social enterprise fund that does invest in affordable housing. So, and that's working with nonprofit or intermediary organizations to actually not only manage, but to also develop down the road. So we're seeing a lot of these innovations coming up where housing is just one part and often a driver for a lot of the work, but it's just one part of what folks do.
Okay, thank you, George. Aaliyah, would you have a quick response to that question as well?
Sorry, what were you specifically asking?
So the question was around what's the best way to increase regular affordable housing in the supply of it, particularly when the regulations currently seem to like dissuade or discourage investors from from doing it because they're not making a profit.
Yeah, I mean, it's a huge question, and I don't have an answer because I think there really is no answer right now unless things like the National Housing Strategy, we really get government to step in, because the fact that it isn't profitable, so to speak, that it's hard to get corporate side to sort of play their role. But I think, you know, the way we're going now in the situation, policy changes, you know, addressing the issues that Nimoy raised that are having a huge impact, and even addressing things like the impact of the share economy like Airbnb and how that's playing a role, are those policy changes are at least the first step, and then hopefully from that to like actually investment dollars from government.
Okay, thank you. So we're basically at the end of our time together. It seems like we could probably continue on with a few more questions. It's a really big topic, but I want to thank each of the presenters for what they shared today, their research, their insights, what they have observed, and the work that they're currently doing in the space of affordable housing as it intersects with student housing and community building and research. Thank you also for each of your questions, and we will be posting the webinar and a video link that will be sent out next week, and it will include some of the presentations that you saw as well. And we encourage you all to sign up for the Community Campus Engaged Canada's mailing list. A link will be circulated with the webinar video, so you can stay up to date on future webinars. So again, thank you for attending. Have a great day, and hopefully this is just a beginning of a really important conversation that we need to continue to have between community, campus, nonprofit, and private sector. Thank you all.